Just when it looked like the trade uncertainty was over with the US and China resuming trade talks, Donald Trump has done it again. The US president has rattled investors with fresh threats of tariffs, and as you can see, we are looking at a weaker dollar. Stock indices are pointing to a lower open on Wall Street. Europe is down as well, apart from the FTSE. So let's start with looking at the dollar yen first of all, because it is testing this bullish trend line, and a potential break below that could spell trouble for the bulls. We just had some inflation data from the US, once again coming in weaker than expected. This time it was PPI and core PPI, both printing 0.1% month over month. The unemployment claims jumped as well, which is not a good sign for the labor market. And this comes on the back of weaker than expected CPI data out of the US yesterday. So as a result of the weakness in data, the dollar yen is once again dropping, and it is testing this trend line at the time of recording. Whether or not it will break through this trend line this time around remains to be seen. But if it does close below it, then there's a serious risk that we could potentially see a breakdown of 142 support and a head down to 140 potentially, where the dollar yen had previously staged a couple of strong recoveries. But will it break down this time more decisively? That's the key question. But first things first, let's see if it will get there. And if it does, what kind of a reaction, if any, we'll see at around 140. Now, in terms of resistance levels to watch, 144 was a prior support and resistance, as you can see by the wicks of these candles. This level has been taken out today, so this level is now going to be the most important resistance level to watch on the daily time frame. Above 144, we have a level around this area here at 144.32, call that 144.35 or so, where the lows of Tuesday and Wednesday's ranges were made. So could we see a big breakdown in the dollar yen finally after what has been a quietish period in this currency pair? Well, that's the key question. The dollar is also falling across other currencies, including the euro. The euro dollar is now above the 116 handle. And it has taken out key resistance and a psychologically important level at around 115, as you can see on this daily time frame of the euro dollar. So this level is now going to be very important in the days and weeks to come. And for as long as we remain above this zone, the path of least resistance will remain to the upside. Now, looking at the equity indices, you can see that markets are down across the board with moderate losses so far. Now, yesterday, the Nasdaq 100 formed a bearish looking candle around the 22,000 psychologically important level, where previously it had also found resistance before the big drop that took place earlier this year. This came on the back of Trump's fresh tariff threats, causing the market to take a tumble. The market is now testing the trend support of this rising wedge pattern. It has bounced off the lows. Let's see where it will close today's session. If it closes below the trend line, I think that would be a bearish outcome. Short-term support below that is seen at around 21,500, this blue line here. Below that, we have the 21-day exponential moving average. So there's lots of support levels that could potentially provide a floor for the market. But things will get interesting if we break 21,500. But more specifically, this low here was the last low at 20,665 before the index made a fresh move higher. So that low needs to hold insofar as the medium term is concerned for the bullish trend to remain intact. But we are seeing signs of potential weakness coming into the market, with the RSI also showing a bit of a negative divergence, making lower highs relative to the index making higher highs. So that suggests that the momentum is waning somewhat. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.